Welcome to Smart Wealth Radio with Altmaier Minnick. This is Dave Altmaier, and our Steve is off to a conference in British Columbia and enjoying the weather up there. But today we have special guest David Morgan, the guru, internationally known for silver, and we're honored to have David that lives in this area and in the booth today. Welcome, David.
Thank you for having me.
Wanted to talk a little bit about what's going on in the market with silver and gold, mainly silver, since that's your specialty. And, you know, over the last year, the first of last year, it was one price, it went down, then it kind of has come back. And last week, it was really interesting to see last week when the market was going down, gold and silver mining stocks were just really going up, kind of offsetting that.
Exactly. If you quickly review 2015, we had actually pretty decent market in the precious metals from January up till about the summer. And then from then on, you were getting lower lows. We're making new lows in both the precious metals, and the year over year looked pretty bleak. And I want to point out, Dave, that this is in U.S. dollar terms. I mean, if you look at gold in, let's say, another currency, it doesn't look so bleak. But in a U.S.-centric market, which most people are, that looks pretty bad. Yeah. Back on point to what you said about what took place recently. Yes, we had a huge move in the gold and silver markets, primarily gold, recently, and it had to do a lot with the uncertainty in the marketplace overall. Mm-hmm. The idea is very, very well known that gold is the biggest alternative investment to stocks. Mm-hmm. It moves in an inverse correlation to the stock market. So to see the stocks fall off on a global basis, to see gold go up, that's something you really expect. What most of us didn't expect, myself included, was you'd see like a $60 move in gold on a day, especially coming off such a substantial low. And just one more, I'm going to continue on. That some of my peer groups say this isn't it, the bottom isn't in, it's going to make a new low. I don't adhere to that school, but I'm not going to rule it out.
So when you're talking about this is a new bottom for silver and gold,
I think it is, but there's some that are let's say followed, and they think that this is just a temporary aberration, and there's new lows to come further out in the year. I disagree, but I don't know.
Yeah, well, you kind of wonder because I don't think we're at a new low for the stock market. So either it's going to go a little bit lower. People that I follow that aren't like doom and gloomers, don't look at the world that way. They just look at strictly the analytics of everything. They kind of feel like the market is going to probably maybe go. It's either this is the beginning of going back up, maybe as high as 2,000 to the S&P, or it's going to go back down a little and then go back up to 2,000. And then the next one that comes, that's going to be a major crash. Bubbles usually don't burst. A lot of times they go up and they go down. And so you saw one in August, you saw one the first of the year, and then they rally back, and then maybe the third time's the charm.
Well, I tend to agree with you. I think that stock markets are overvalued. I think they are coming down. I think that there will be, ups and downs in all markets, and that the overall trend has changed. I think the overall trend is hard assets, especially gold and silver, are going to start moving up over the next 3, 4, 5 years, and the overall tendency for the equity markets will be on a downtrend.
And, if you look at what Warren Buffett's been putting his money in, it's been hard assets. Well, so much for money. There's more to life than just money. However, that's what this show is. We talk about a lot, but not everything. And, let's talk about maybe some things you've been reading in your life. You're over age 60 now. And, what are some things in a perspective that you've seen?
Well, I wanted to, thank you for inviting me to come in on the Sunday segment because, we talked on Saturday at the close about, the different forms of capital and that, money alone isn't the solution. The idea that money solves all that money solves all problems is a rather childish idea. And so you're asking me basically, after 6 decades or so on the planet, what kind of perspective do you have on that?
And just to make it straight, money can solve a lot of problems, but it doesn't solve everything. because a lot of things happen in life. There's no guarantees, and we never know what can happen to us.
Exactly.
Yeah.
I absolutely agree with that. So one of the things sticking on the idea of, the banking system and how much power it has on the planet, not just in the United States, but really globally. And so what have we seen recently that has come to the fore? And I want to back up slightly and say I stated, and others too, that the internet was an important development as the printing press was in its age. In other words, the internet, I think, is such a profound development that it really levels the playing field where the little guy, the average person, has maybe not an equal voice to the power structure, but certainly a significant voice. So on that theme, I want to talk about the banking system and how much they control, people with the monetary policies that are in place. Well, what's happened? Well, what's happened over the last few years is you have what's called crowdfunding. Now, crowdfunding, as we know, or those that don't, most of us do, is that you have the idea that you have an idea, Dave, for whatever, new book. Mm-hmm. And so you go to the market and you go to one of these websites that does crowdfunding and you say, I have a new book. It's going to be on this topic. And if you buy the book, I'm going to provide you with a signed copy of this book if you donate $100. And if you donate $200, I'm going to give you, 2 signed copies. And this is the idea. I won't want to elaborate too much. But this whole idea of crowdfunding is kind of full circle back to what I call the American way. If you look at the stock market back in the, let's say, beginning, if there is such a thing, the idea was that if I had an idea.
Is that when they were selling tulips?
No, that's pre-U.S. stock market.
Yeah.
There have been bubbles throughout history. I don't think you can avoid them. Maybe we can. Maybe if we become more enlightened, we can.
Yeah.
But the idea was that if I had a good idea, I could go to my friends and neighbors. I could, borrow money from them because they believed in me and my idea. And maybe they became part of it, and that's called sweat equity, where you help me build let's use Henry Ford, the first car.
Yeah.
And then the stock market developed kind of with that idea that you didn't necessarily have to know the people, that the public could say, geez, that's really a great idea. I'm going to put my money in. Mm-hmm. And in the ideology of the stock market, you basically are an owner of the company, and you get to reap in the benefits that that company provides. In other words, if the company makes a profit, you get to share in the profit. And that's usually given off in the form of dividends. But that whole model has really been distorted in my very studied view for the last many, many years. And the stock market is now basically a big casino because some of the tenets that I just outlined really are more conceptual. They're really not vitally important in most cases. There are some that they apply, but in most cases they don't.
Yeah. Well, and that's so true. We see days where good news is bad news and bad news is good news for the market. I mean, it'll come out and the earnings will be down, but the market took off because that means they're not going to raise interest rates. And, it's like, what? So, well, anyway, we're going to be back with David after this commercial. In the meantime, you can call me at 32SMART if you have any questions about your own personal situation and get a free diagnosis. And we'll be right back after these important messages.
It can be difficult to know the best way to manage your wealth. Hi, I'm Steve, co-host of Smart Wealth Radio with Altmeyer and Minnick. I help my clients relieve the stress over growing and protecting their wealth. Frank and Joella are so happy they wanted to share their story.
We lost a fair amount of money in the stock market. For us, we lost about half of what we had saved. Now, granted, we did get most of that back over the years, but at 65, we thought there's no way we have the earning capacity to replenish that. So we found Steve.
We've been relaxed because what he showed us and presented to us is really a no-risk deal.
Frank and Joella, thank you for your kind words. Call me today, 509-32SMART. That's 327-6278. Helping you to be smart about the health of your wealth.
Welcome back to Smart Wealth Radio with Altmeyer and Minnick. This is your host, Dave Altmeyer, and today Steve is at a conference, and we have our special guest, David Morgan, international renowned as the silver guru that lives in the area, and David's joined us here, and we've been talking about other things that are important in life other than just the greenback, if you will. So, in David's terms or life, it'd probably be gold, it would be silver. So, anyway. So, David, we were talking about things that, you've been reading, studying over life that, are important to a person's well-being.
Absolutely. And, the idea, again, that, how do you have a balanced life? I mean, my basic life's experience has been very telling on my personality. I tend to do things to extremes. For an example, going way, way back, very few people know this, and you'd have to have as much gray hair or no hair in your head for the male versions to understand what I'm about to say. But when I was 17, I swam against Mark Spitz at the Santa Clara Invitational Swim Center for the trials to go to the Olympics for freestyle. Wow,
you're right. You kind of, now that I think about it, you're tall and lanky like a Olympic swimmer, yeah.
Yeah, so for those that don't know, Mark Spitz was like the Michael Phelps of renown now. And he won, I think, more gold medals, or had the most gold medals of anybody for a long time. And now I think Phelps has superseded that. But the point being,
I remember as a kid watching that. I think it was 8, and every time it was like, was he going to get the gold medal on this one? Yeah, it was a big deal.
Yeah. So, to summarize it, he came in first. Yeah. I came in 6th, and he went to the Olympics, and I did not. Yeah. But just to be in that, classification really does say something about, my swimming ability.
But everything isn't about coming in first. Look at Bruce Jenner. I mean, he came in first, and see where he's at today. But we'll see where he's at in 5 years.
Yeah. So I really did it, and hopefully didn't sound too much out of ego. What I'm trying to explain is my personality, which is extreme. Yeah. So if you go later in life, and I've been pretty much an exercise, not nut, but I guess you could say that because I do overdo things. Most of my life on and off. So I started getting sluggish and out of shape, and I was in my 50s, and I decided to show my daughters, because I'm a late bloomer. My firstborn daughter was when I was 40, and my second one was about 42. So I was in my 50s. They were, in the 10, 12 age group or so, and I decided I would start doing triathlons because I had such a good swimming background. That's sort of the hardest part for most triathletes. So, did I do it in a halfway manner? No, I didn't. I mean, a triathlon alone is kind of an extreme sport anyway. Yeah. And so I started doing the, swimming, biking, and running. And I pursued that for 4 years. I can't tell you I got any great accolades as far as, my age group or whatever, although actually I did fairly well. But this is kind of the extreme sport or the extremeness of my personality. So I've done that, in the monetary sphere, learning, what is money? I mean, I didn't care so much about what, a piece of paper meant. I wanted to know the history of it. I wanted to know this, all the stuff that I talk about all the time, and I won't digress and go down that path too far. So what I've learned from, the way I live is, since I tend to do things in extreme, I really need to find balance. And that's sort of been my struggle for my life. It's balancing athletics with family. It's been balancing these road trips with time to just relax. It's been balancing, many, many aspects of my life. But I find that when I do, get to that balance, and I don't stay there because you can't, but I can look at what areas that cause me, stress or where I feel out of balance. I mean, one of the things in my industry, or speaking more for myself, is the personal relationship situation. I mean, with the internet and Facebook and Twitter and all these things, I can get a great deal of information out to people. But there's nothing, in my opinion, that is as strong as the personal interaction that I get to do at, let's say, an investment conference. Because you can meet these people and really see them and talk to them one-on-one as a human being, which you really can't do, on a Facebook chat or even Skype where you're looking at them or whatever. You might get a better feel for someone. But that's why I think the idea of these investment conferences will really never go away, because it is a personal relationship. It always, in my experience, comes down to personal relationships. That's why, when someone calls you and comes in and gets, their wealth position looked at by you or Steve, it's that relationship that you're building. They might not get anything out of it other than a feeling that maybe they need to make a change, but they're not ready to make it. But at least they have of you. But having that personal interaction, I think, is something that our society has moved away from a great deal with the iPhone and the iPad, and everybody's looking at their screen and no one's really interfacing, and you go and you don't even look up from your iPhone. I think this is something that has gone way too far out of balance and is going to start coming back. That's the way I see it.
We work a lot on the experience that people have when they come through our office. That's one of the we're different in a couple ways. When a person comes through and visit with us, their experience is different. And then the other thing is, we really look out for people. I work with a lot of widows, and I take that very, very serious because at the end of the day, I mean, I have a reputation, and I answer to someone else other than me. I don't work like Wall Street, and so we both believe that and take that serious. And you're right, relationships. I mean, my mom used to say, too, she said, the only thing you leave on this earth is your reputation. And, how do you want to be remembered? And,
Well said. And I like to add on, one of the many paradoxes of life. And if, here you go a little counter to logic. You say, well, it can't be white and black. That's illogical. But there are paradoxes, or I strongly believe that there are. And one of them, and one of my favorites, is you can be of service to others and also be serving yourself. Now, if you go in with something totally self-serving, like this widow comes in and I'm going to make sure that I get every, nickel, I'm going to position her where I maximize my benefit. No, if you maximize her benefit, you get what you deserve. And that is a paradox because, it's going to help you, but it's also helping her. And those exist, and I really think we don't stress those enough.
That's kind of interesting because we did have a widow, and she asked me, I want to get some silver. And I said, great. And, she asked me about who to contact, and I gave her the information. I didn't make a dime off that, but she needs to have a balanced portfolio, and, that's important.
And see, those things are intangibles, and those are the things that make us human. Those things make us real. And those are the things, from my perspective, and, I'm sure you agree, makes you feel good. It's like you helped her to the maximum ability of your capability, and it helped her. It made her feel better. If you would have said, oh, no, that's not for you, or, the amount of capital you have, it shouldn't be, or any of these other things. No, look, it's not going to hurt her. I mean, she could overload. I'm sure you may have had to adjust or not. I don't know. All I'm saying is, look, if you do things with the heart, we've gotten away from the idea, at least this is the way I see it, about what a balanced human is. It's not a head person, and I'm an intellect, or I think I am. It's a head and heart. You have to be complete, and that means you have to put your heart and your head together to be balanced enough to really be of service to others.
And, people, and the other thing is people have feelings, and, that is one thing that is good about our country. We do have certain characteristics where we care about other people and taking care of people. And we might not agree on how that is done, but we don't see that in a lot of other countries. Like if you go to the Middle East where, if you don't think the way I do, then, So and you're talking about balance. I was thinking the conference Steve's at, they're really big into schedules. They have certain days that they call buffer days, but one of the things he has probably once every 6 weeks you get away somewhere, and if it's on a beach or something, and that's where those ideas come to you. It's almost like you reset your brain, and when you're in the middle of everything and pound, I mean that's why you go to bed at night, is so that your brain resets in the morning, and sometimes you wake up and you go, wow, now I've got the answer to that.
Exactly. Well said.
And the answer right now, my friends, is we're going to take a break after this message.
Dr. Jim Goff talking about his experience working with True Wealth Financial and Altmeyer Strategies.
Hi, I'm Jim. I am a physician here in Spokane with Rockwood Clinic. Well, I first met Dave early on when I first came to Spokane. He's very knowledgeable about his business, and he is patient and willing to do things on your time and not on his. Probably most would agree that some diversification across maybe several different types of products or approaches is appropriate. And I would certainly recommend Dave to my colleagues, friends, to at least take a look and see what he has that might help them in retirement planning.
Dr. Goff, thank you for your kind words. This is Steve Minnick. If you have questions about your retirement and want to get off the Wall Street roller coaster, call me at 32SMART. That's 327-6278, and find out what we can do for you. True Wealth Financial, 327-6278.
If you have some questions about your upcoming retirement or are not sure you are prepared for retirement, please give Steve or Dave a call. They can help answer your questions and provide a free consultation about your retirement preparedness. To set up a meeting time with Dave or Steve, call 32SMART. That's 327-6278.
Welcome back to Smart Wealth Radio with Dave Altmeyer, and we're joined today with our special guest, David Morgan, and Steve is off to a conference. And we've been talking about what we've seen going on lately. And while we were off the radio, a lot of you that listen know my brother Phil's the director of Union Gospel Mission. And I, just on a lot of things that I've read over probably last year, I said, this is where I see where our country is going, and it's not a good place financially. And he heard me out, and we were with some family members, and he said, the weird thing is this isn't Dave's personality. He's not a doom and gloomer. He's always up. And so what we want to talk about right now is opportunities and, what can be bright about the future. And, if we place our hope on one man or one woman to be the next president, we're going to be disappointed. And so, David, what are some things that you see as opportunities or that kind of thing that's important when we get down to life?
Wow, great question. And you asked me, so I get to answer it. But I would say, I've done this before, Dave, and that is I basically made a public apology for the baby boomer generation, which I'm part of. And the apology, I won't draw it out, but basically it goes, for the people in my generation that had bumper stickers that said that he who dies with the most toys wins, I apologize for that. Yeah. Anyone that thinks that's the way to live life is very sick indeed. Yeah. So I'll start very personally. I'll look at my two daughters. I'll look at the millennial generation, as I told you in the last segment. At my age, my daughters are still millennials. Mm-hmm. Right. And I look at the way they interact. Yeah. And I'm certainly not an expert, and I haven't written a book on it, but from what I see from my own experience and what I've learned from them, is they have much more of an open, what we would call open source, which means that when I was living in suburbia at their age and just got my first job and all this, the whole idea of taking care of my little property or my area was I'd have to get my own lawnmower, for an example. I make a very corny example, and I make a very significant point with the corny example. The millennials don't think that way. They think differently than the baby boomers. They think, well, we've got all these lawns out in front of the house. We need a lawnmower that we can share amongst us. There's a whole different attitude about possessing things. They look at things more as a utility value of what does the function mean and what does it serve. It serves everybody has a better looking front yard than I have to have a Toro, and my Toro's better than my neighbor's Honda. I mean, the kind of attitude that I grew up with. So that's one thing that gives me a lot of hope.
And I'll add something. I heard that the differences, it was probably 4 years ago, and they say, baby boomers are into trophies. And when you're talking about, I got a Toro, I got a John Deere, and we're into trophies, and people if they're going to work with you, they want to see your trophies. Millennials are more into relationships and what did you do yesterday for this person? And it's much more, what are you going to do for me type of thing? Help me.
Well, I've been a, thinker. I love life. I've gone across the board from, being an athlete, being what I do for a living now, and explored a lot of things. Certainly I love to learn. And one of the things that looks like to me on the millennials is what I wrote about in the Morgan Report several years ago, kind of a philosophical editorial, and it was called The Minimalist. And the minimalist would be something that their trophy would be that I burned less BTUs than my neighbors, that my mode of transportation left the lowest footprint of getting A to B. I mean, keeping on this theme, Dave, the idea, for example, with some of these technologies that work through the internet, like Uber, for an example, or Lyft, or one of these transportation services, which I use almost exclusively when I travel now. I haven't used a taxi in quite some time. Occasionally, you can't get Uber at an airport because they're restricted or that type of thing.
Man, I have a friend, Ken. He is retired, and that's what he does. He drives a car, and believe me, he drives a Lexus. Would you rather go in a Lexus or one of these taxis you see around in the Lilac City, folks? But a lot of his business, just as a side note, take a rabbit trail, is taking Gonzaga students to and from the airport.
Exactly. So let's just drill down on that a little bit. Some of the millennials are probably questioning, what I need is transportation. Do I need to be encumbered by the liability of a car? See, they look at things more objectively than our generation or my generation. It's like, well, it's an asset. Well, a car is not an asset. It's a liability. You have to insure it. You have to maintain it. You have to put fuel in it. Tires wear out. There's all these things that are liabilities. Whereas if all you're looking for is transportation, you hit the Uber app and you go from A to B and that's all you need and you pay them a reasonable fee. Yeah. Do you really need to have your own automobile? Again, that comes into question. But this is a whole different way of thinking. So that gives me a lot of hope. It gives me a lot of, ideas about the brightness of the spirit of the individual. People really can adapt quite well. If you look at extremes, and we're talking about balance in the last segment, if you do it from a broad brush, big perspective, you could look at the Dark Ages, which was horrible. But what came out of it was the Enlightenment. So again, the balance. All these repressive years that we call the Dark Ages were... There's books that could make arguments. I don't want to go down a rabbit trail that it wasn't that dark, but let's just call them the Dark Ages, and let's agree that they were pretty dark. And at the end of it, you had the Enlightenment. So you had this balance of all these ideas, these new thoughts. I'm a big believer there's nothing as powerful as an idea whose time has come. And so the millennials have new ideas, a new perspective, a new way to look at this. Well, this gives me the idea of a very bright future. It's not about how much stuff you get. Yeah. It's really it is, the secret of life. And I, very, very, pompous to say, the secret of life, but the secret of life is the meaning you give it.
Yeah.
And most of the significant things in my life has been when I have been giving to other people, not only through what I do in the financial arena, but maybe on a personal basis or whatever. So this is, for me, what the real joy. And I think that very much that the millennials get that, whether they can articulate it or not, much more than my generation, which was very, very selfish. They are the opposite.
Yeah. Yeah, I think our younger generation saw their parents climbing up the ladder just to get to the top to find it was on the wrong wall. And I think they see that relationships do matter and it's more important. And, when you go to someone's funeral, what do they talk about? They don't really talk about, hey, this guy had, 3 BMWs and, blah-de-blah-de-blah-de, as Steve would say. So that's very good to talk about that and to put things in perspective. And those are things that we can stay positive about is our relationships with people. And that's very important. So I just want to thank you for coming in, David, and spending your valuable time with us. And
well, thank you, Dave. I value our relationship, and it is building.
Thank you. We'll see everybody next week. Bye-bye.
The information contained herein is not intended to be and shall not constitute an offer to sell, nor the solicitation of any offer to buy any security. Content is provided for information purposes only and is not to be treated as advice to make any specific investment. Please consult with an independent investment advisor before making an investment decision.